Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Accountant's Minute. I'd like to take this opportunity of wishing you, your colleagues and your families a very happy Christmas 2016, and I hope that 2017 will be a very prosperous year for you in your business and obviously in your own family situations. Over the last 6 months, the team at ESS BIZTOOLS have brought to you comments on a wide range of business issues that we believe are important for accountants to think about as you plan the services for your clients. And as part of that planning, I would urge you to take into consideration feedback from the small medium enterprise community as to the services they require. And there have been a number of surveys over recent years by CCH, MYOB, Smithink, universities and other organisations that have all indicated that small medium enterprises want additional commercial services. Now, some of you have said to me, oh no, that's not how it works in our clients. They don't want anything else other than taxation. But when I've said to those accountants, if you sat down and had a conversation with your clients, have you talked to them about the additional services that you could provide? What was their reaction then? And some of them have admitted to me that, oh yeah, maybe the clients thought that work was normally done by other consultants. Because unfortunately, I believe accountancy profession in toto has ignored a lot of the issues that I'm going to talk to you today about. And this has allowed other consultants to grab that space. In lots of ways, it's already happened with financial planning, and it will happen in some of these other commercial areas unless accountants start offering a proper service. So let's look at the issues that I've identified for 2017 as part of your resolutions. Debtors management. A report released a couple of weeks ago by the Australian government's Small Medium Enterprise and Family Business Ombudsman indicated that Australia had the dubious distinction of having the highest debtors days outstanding figure in the Western world. The debtors days outstanding figure in Australia is 56.8 days, according to the Ombudsman, based on a worldwide report. That is something that none of us should be happy about, and I believe it therefore makes debtors management the number one task for accountants to think about for 2017. How can you work with your clients to assist them to reduce that staggering debtors days outstanding figure? Number 2 problem, I think, is personal property securities register. Whilst there's no doubt that there has been some improvements in how the register operates, this is still quicksand legislation for uninformed small medium enterprises who are not aware of the consequences as to how much money they can lose, and in fact could lose their whole business and their homes through ignorance of this legislation. It seems strange that you can lose your business through not having registered on a government register, but that is the case. So I would urge you to talk to your clients about you undertaking at least an annual review on their internal systems relative to the personal property securities register. Chief Financial Officer services. With the computer technology that accountants now have and a significant number of these small medium enterprises have, together with the improvement in communications, you should be able to run a virtual CFO service for clients situated anywhere in Australia, not just taxation. Clients need more than taxation. They definitely need taxation advice. I'm not disputing that. But they also need other advice. Advice in areas like two of the areas we've already mentioned. Their debtors days outstanding, their overall debtors management systems, keeping them out of trouble on the personal property securities register. Succession planning. There's thousands of baby boomers in Australia contemplating retirement or doing something in their businesses. Succession planning should be a major issue for accountancy businesses. Capital raising. For the last 20 odd years, since Paul Keating first introduced Section 708 to the Corporations Act, that section was the only way that SMEs could raise capital. But the government has now expanded that. Not only do we have Section 708, which enables a company to raise up to $2 million per annum from 20 investors, but we now have the early stage innovation companies. And hopefully in 2017, we are going to have the crowdfunding equity raising legislation passed by the Parliament. This is an area that I also believe that accountants should be staking a claim for. There are other players in this market when it comes to capital raising, but most of the businesses are going to be small businesses, the natural clients of the accountants that this Accountants Minute is targeted at. Government grants. This is a fund that's put together by the federal and the state governments that has been contributed by every taxpayer in Australia. Yet I suspect there are thousands of small medium enterprises who have paid into this grant fund who don't know what they could get back from it. No one ever gives them any advice about that, and therefore they are ignorant of it. Ignorant until they hear that one of their competitors has received a government grant, and then they can get quite annoyed. As someone from Sydney told me about a situation the other day where a client had gone to their accountant and said, "Why haven't you told me about this grant? I want you to put the application in." The accountant said they were too busy doing tax, so the client terminated all of their dealings with that firm. And apparently this was a client that was paying a substantial amount of fees to that accountancy business. They were upset that they had never been told about particular grants. Other areas that you might look at: budgets and cash flow forecasts. Business valuations. Especially for companies who are going to try to raise capital, they need valuations. Business plans are like maps for tourists. If they're going to raise capital, they will then need to produce an information memorandum. And if they're going to be talking to potential investors, undoubtedly they're going to have to make investment pitches. Directors' duties and responsibilities is another key area where many of your clients need some assistance with the complexities of the law. And that relates also to corporate governance. Many businesses are looking to develop long-term visions, call them 5-year plans if you like, but they need a top financial input, not a taxation input. They want a financial input into that planning. Management accounts, I believe, should be prepared so the management team clearly understands how the individual operation that they are responsible for is performing. And out of that should flow key performance indicators, ratio analysis, comparison to budget reports. Another big area, of course, is benchmarking, relating your client's performance to their peers in that industry. Benchmarking.com is an organisation which can supply that information for around 130 different types of businesses in Australia. portfolio allocations. I conducted a survey seminar with some directors a couple of weeks ago, and it was amazing when you listed out all the portfolios in the business, how many of them were still being performed by the managing director or the CEO. A list should have been prepared and some advice given to those clients to allocate responsibility for those portfolios to other people. I believe, though, one of the biggest resolutions you should be making for 2017, if you have not already done so, is to appoint product champions to each of those items that I've just discussed. Because when you look at them, there's a lot of different aspects there. And for accountancy businesses that are busy doing tax returns and other things, I don't think you're going to cover these jobs unless your individual team, your accountancy team, is allocated the responsibility for individual products. And the other key appointments that I would be suggesting you make is industry champions. The accountancy firm of the future is going to require in-house champions on the industries that your clients relate to. How many different industry groups does it make to equal 80% of your clients? Is it 5? Is it 8? Is it 10? And if so, that's how many industry portfolios you should be allocating within your accountancy business. A couple of them might be allocated to the same person, of course. But if you've got a strong medical industry, who's your medical expert? If you've got a strong stainless steel manufacturing clientele, who's your sheet metal industry expert? If you've got a clientele of sugarcane farmers, who's your expert in that industry? And there's plenty going on in that industry at present. Who's your expert in beef cattle, and so on? And that way, when your clients come to you or prospects come to you, you can really talk the talk to those clients and prospects. I hope that in 2017 you will be able to make business advisory services a very important component of your mix of services that you're offering to your clients. You will always have taxation, you will always possibly have audits and self-managed superannuation funds and financial planning. But I would really like to see you resolve that 2017 is the year when business advisory services is going to be treated as an equal service offering within your accountancy businesses. Once again, may I take this opportunity of wishing you a very happy Christmas and a prosperous 2017. From the team at ESS BIZTOOLS, goodbye, and we'll talk to you next in 2017.